Hello, everyone. Welcome back to another episode of Market Bites. And then there were two. Josh is unfortunately away this week, but fingers crossed he will be back. So Neža and I will be steering the ship through these crazy times. Neža, how you doing?
I'm doing well. I feel obliged today to comment on football because Josh is not here, and I think that he is not in the best mood as Liverpool lost yesterday. I had to watch at least part of the match as I knew that he's not here today.
Yeah,
Uh,
it's his real reason for not being here is nothing to do with football.
yeah.
But I do think if he was here, yes, like you said, he wouldn't be in the best of moods. Liverpool are out. Paris Saint-Germain had won, and actually we're all in Paris next month, aren't we? Us and the analysts. We've got an event there, so that'd be good to get out there. Have you been Paris before?
No, it's actually my first time going to Paris. I don't know why. I visited majority of the Europe capitals, but Paris never happened to be on my list. So I'm really happy that this time we are going there.
Yeah, absolutely. Any recommendations, please do get them in, whether it's on YouTube or on the eToro platform or on Twitter, whatever. We want recommendations. Well, I do anyway. I want food places. I want things to
Yeah.
do during the day. We'll have a little bit of free time, and I think a few of us are staying a little bit longer than the event as well. So we've got time to wander about and do bits and pieces. So get those recommendations in. Um, Back to the podcast anyway. We'll talk a little bit about the sell-off we're experiencing in markets. The S&P 500 just going into correction territory yesterday. We'll talk about the US CPI, which is coming out later today, Wednesday, the 12th of March, and then we'll talk about CoreWeave as well. Sound good to you, Neža?
Yeah, all good. I mean, it's so much happening on the market, and as always, I think that every week we are more surprised on what is happening, and we have so much to talk about.
So much to talk about. I was doing the daily voice earlier, and I don't know whether you used to do this, but you've probably seen it on like movies and stuff like that. You know when someone's got like a sunflower and they pick off the petals and
Yeah,
they're like, he loves me not, he loves me. And it feels like Donald Trump is doing that with putting tariffs on, taking tariffs off, putting tariffs on. And yeah, it's just crazy times at the moment, very headline driven market. But how are you feeling about it, the current state of things at the moment?
I mean, it's so hard to comment on that because I think that market is constantly digesting new risks, adjusting expectations, and it's just trying to figure out what next Trump move will be. And that's the hardest thing to predict right now. As you said, it's changing minute from minute. It happened to me before that I was writing something about what was happening on the market. And during the time that I was writing it, Trump already changed the policy. It is changing so fast. But if we talk about the current situation, like it feels like, yeah, it's different this time, but honestly, is it? Because markets just don't move in a straight line. We get corrections, we get volatility. It is uncomfortable to see your portfolio down few percent in a day, but honestly, it is part of the cycle. And it's not the first time, it's not the last time. If we zoom out, it happened before pandemic. It caused like 34% drop, and then we finished the year in a positive. So timing the bottom is impossible, but I see it as a Black Friday sell. So to be honest, if I like the company, if I believe in it on a long term, I'm happy to buy more when it gets cheaper, right? Like what's your view?
Yeah, I'm with you completely. I echo all of that. And it is very hard to time the bottom. It really, really is. So you do get some people, and we'll talk about equity specific here, with the S&P 500 index that will say, okay, well, if you give me a 10% drop, history shows me it recovers and recovers within a certain period of time. I will get involved in that. 20%, the same thing. 10, 30%, if that happens, then yeah, like you said, in the pandemic, people who bought the S&P and the Nasdaq and the Dow Jones in sort of March, April 2020 are laughing now, and those good quality stocks that you mentioned. I've got some stats actually just on drawdowns for the S&P 500. So 1% drawdown happens every year. from the peak. 5% happens every 1.1 years on average. 10% 1.6 years on average. 15% every 2.5. 20% every 4 years on average, and 30% every 10 years on average. And if you do look at the S&P 500 and you zoom out, it does just make all-time high after all-time high. It seems it hasn't had 2 down years in a row since the beginning of the millennium with the dot-com bubble. The last down year was 2022, which was obviously significant, but then we were back-to-back
Yeah.
double-digit 20-30% returns. And so is this an opportunity? Potentially. Can it go lower? Of course it can. But if we fast forward a few years, it does feel like, everything's going to be okay. And we talked about it last week, I think, didn't we? Just about some of the other reasons for some of those 5% or 5% or more moves lower. And you talk about recession fears, stubborn inflation, the COVID stuff, inflation fears, rising rates, coronavirus, trade wars, and stuff like that. These are things that at the time panic people, but we're all higher from them right now, aren't we? So I think it's quite good to put things in perspective. Do you agree with that?
Yeah, absolutely. Because I think that it's hard to put things in perspective when you are in this situation. But when you are looking back, everything seems so clear. But it's true that market just hates uncertainty. That is the one thing that the market really doesn't like. But it's funny when you compare SP 500's performance with SP 500 equal weight. I think that I already mentioned that in the last week episode, but it's true. We had those big tech companies with pretty high valuations, and they are a big part of the SP 500. And since their performance is not the best, also SP 500 is not doing that well. Year to date, it is down about 5% now, but equal weight, on the other hand, where all companies represent the equal part of the index, is down only 1.8%, 1.9%, something like that. So here you can see the difference, which companies are really pulling back the market right now. But as you said, it is not something that will go on forever.
No, and actually, just talking about some of those magnificent 7 companies, if you look at Microsoft from its 52-week high, down 18%. Meta, down 18% from its 52-week high. Amazon, 19%. Google, 21. Nvidia, 29. Tesla, 53
Yes.
on
Yeah.
last night's close. Incredible. I mean, listen, I think Tesla's an interesting one, isn't it? I think if you like the company and you believe in the company, I mean, you're getting a massive discount. But it wasn't too long ago, it was trading at all-time highs, literally, a couple of months ago. So it's a significant drop. It's not going to be for everyone. And actually, for those listening, I'd be interested to hear what you think about it. But some other assets from their 52-week high, the S&P on last night's closed 9%, 10%. Bitcoin down 24%. Ethereum 53% off those highs. Incredible. Dogecoin 66%. Trump coin 86%. Fartcoin, which I can't believe I'm saying on a podcast, is down 90% as well. Equities this morning up a little bit. I guess when it comes to these things, people will try to look at technical analysis to potentially pick a bottom. I mean, the way I'm looking at it, and I'll post this chart on the eToro platform so people can at least know what I'm talking about. There's a really significant area in the market, and we go back here to the highs that we had in July last year, around sort of 50,700, and that found resistance again in August. We then finally broke through mid-September. We almost retested it just on the election result. We found support there last week, and then we've broken down this week. So it'd be really telling to see where we close. If we can close above this level I'm talking about, and then again I'll put it on my eToro platform, then I would say, okay, that is a potential signal for a low to be in. If we close below this level, then downside could well continue, and you're looking at areas where we traded at sort of July last year as well. So it's going to be an interesting end to the week. We've obviously got inflation, which we'll talk about in a moment. But for technical analysis, Neža, is that something you look at or not
No.
really?
You know that that's not my cup of tea. I'm fundamental. I stick to
Yeah.
fundamentals. I know that also with technical analysis you can make a great predictions, but it's not for me. I think I stick to fundamentals and the strategy that I would go with if there is a company that I like in current situation. And since it's impossible to predict where market will go and where is the bottom, I would just dollar cost average
Yeah.
down, no matter the technicals. But yeah, technicals for the short term, it's a great choice. And also right now for traders with all this volatility, isn't that the best time ever?
Yeah, absolutely. I mean, traders are loving it. Traders are loving it. I guess that the only time they wouldn't be loving it is if they're in what they deem to be a great trade. They've traded their edge, the setup is
Yeah.
perfect, and then a new headline comes out and it just ruins their gains. And it used to happen to me all the time in sort of between 2016 and 2020 when I'd been a great trade. I remember being long Nasdaq once, very near my target, up, nice amount of money, and then a headline comes in about some sort of tariff between China and US, and it reverses straight away, stops me out, and then a few minutes later, another headline comes out and it goes up again. You're just thinking, oh, I mean, what can I do about that? But
Nothing.
yeah, it's tough. But also, you make a very good point. About the technical analysis. If it isn't for you, and anyone listening to this, if you've got your style, you've got your edge, you've got your strategy that works, that's what's best for you. Don't feel like you need to get involved other ways. I think when people try to do too much, it can ruin things. So it's getting to
Especially in times like that, when there's a lot of uncertainty, you feel the pressure that you have to change your strategy. And that's not the thing to do at this time. Like, stick to your strategy that you have that works for you, that you know that you're comfortable with, even during this time of uncertainty.
100%, 100%. Right, let's talk about our next subject, US CPI. From a scheduled point of view, the most important thing this week, I would say. Um, from an unscheduled point of view, there'll be some new headline that we can't quite predict that will move the markets. But all things considered, this is going to be key. So it can influence the market. I mean, it could be the reason we do find a bottom for the next few months, right? It could be a
Yep.
reason we continue and move lower and end up in a bear market for the S&P. So it is an important release. How do you see it going?
I see it as we are in some kind of crossroads because the Fed wants to cut the rates, but they don't want to risk inflation going back up again. And the market, on the other hand, is desperate for some clarity, just to get some clarity. And maybe with this CPI report, we will get some indication where inflation is moving. We could see a short-term bounce, especially in those beaten down sectors. And the market is pricing in softer print. So with the headline inflation coming in at 2.9, and last time it was at 3% year over year. And if we hit those numbers, or if we come even a bit lower, that could maybe give Fed more confidence in cutting rates a bit sooner than we were expecting. And that could be a positive sign for the market. And we maybe, as you said, we could find a bottom, but there is also an option that inflation comes in hotter than expected. And if it stays at 3%, then we are looking at even more uncertainty. And I wouldn't be surprised if we go even lower. I don't know. It's impossible to say what we will see today. And do you have any other view?
Yeah, I mean, just you talking about the potential of it being a high number scares me, because
Yeah.
the market would go lower. It would. It doesn't really seem like there's, sometimes you go into these data releases and the market, in the hours before will sometimes give you a little bit of a wink and you think someone knows something here, but there's not really like a significant move in the market as of now. And we're 2 hours, 10 minutes away at the time of recording. People listening on the podcast will be able to get this before the release, but on YouTube, you'll be watching this and it would already come out. So we'll talk about the markets that will move in a moment. But yeah, with the clocks changing in the States, obviously cash open is an hour early for those in the UK. So the data release is happening shortly. But yeah, I hope it's lower. I think that would be
Same.
what the market wants. I'm just looking at the Fed Watch tool, CME Group
Mhm.
Fed Watch tool, good little tool for people to keep an eye on, what the Fed might be doing at each meeting. The next meeting is in 7 days, so this time next week in 7 hours time, and they've got a percentage chance probability of a 3% chance of it ease, 97 chance of no change. I think that we're not going to see a cut next week. But as you get to May, that percentage chance of an ease is creeping up. 35% in May. In June, it's 81%. And then by the time you get to July, 89% and 96 for September. So a lower number, you'd imagine we start talking about a cut in May. A higher number, that number, which is currently 35%, will go down. And for those looking to potentially trade it, your dollar-related currencies, hotter inflation, dollar stronger. Hotter inflation, equities would come under pressure. The S&P, the Nasdaq, the Dow Jones, risk assets as well. If it's a lower number, then in theory you'd expect equities to find the low and push higher. However, of course, there's a situation, Neža, where we get a great inflation report, everyone's happy, and then Donald Trump starts tweeting or talking about something. It is a tough market at the moment. Let's be honest.
It is. But I mean, also his goal is that inflation comes down as soon as possible and the Fed starts cutting rates in some of the next meetings. I think that the market is aligned with his goals, but honestly, he can surprise us anytime. He can say something and the market goes down, even though inflation is much lower than we were expecting, as you said. And it is just impossible to say what he thinking about, right?
Do you think in like say 6 months time we'll look back and equities will be a lot higher and we're going to have a conversation where we're going to go, Trump knew what he was doing here and what a genius? Or do you think he's kind of gone into this situation not thinking any country's really going to hit back the way they have, and he actually is not been as prepared? Where do you sit on this?
At first, I thought that he was absolutely right and he knew what he was doing and he is a businessman and he
Mm.
knows what's happening on the market. But now I maybe I'm just not smart enough to follow his moves since they're changing so fast.
Yeah.
And I honestly can't say. Do you think that he knows what's happening and everything is planned or not?
Gut feel is there's something going on behind the scenes that we don't know about, and why would we?
Yeah.
But also I don't think it's like the most genius thing to say that markets will be higher in 6 to 12 months. I mean, markets go up over time. I don't think that's crazy to say. So in 6 months, if things do look better, I'm not going to go back and be like, Neža, do you remember that conversation where I said markets will be higher? Um, but there is a chance that he's actually massively underestimated things, and the market's just not buying into Trump 2.0, and it'd be really interesting again to hear what our listeners think about that. But look, let's move on. Last subject today, CoreWeave, and I was looking at some of the headlines coming through the wires on Monday and Tuesday over on the Reuters and Bloomberg, Financial Times, all of those kind of things, and they were saying that they've inked a $11.9 billion contract with OpenAI ahead of their IPO. I mean, this is it's a pretty big headline, no?
Yeah, it is, especially right before expected IPO, because the company is one of the big AI players. They are specializing in this cloud-based graphic GPUs infrastructure for artificial intelligence developers. So it's all into this AI game that is still hot at the moment and it's developing fast, but it is just not a major headline, just like tariffs and all of it. But I think that this news is kind of a big deal because before that, I was just looking at the company before, and before that, Microsoft accounted for like 60% of their revenue, and this is a kind of a risky position to be in to count everything on one customer. And now with OpenAI coming in as major customer, it diversifies their revenue stream and strengthens their IPO pitch. And market loves growth stories. And AI is still a hot topic. So I see it as a positive news. And since AI space is evolving that fast, I think that this could be one of the players in AI industry. What's your take on it?
Yeah, I mean that's it, isn't it? It's evolving so fast. I was
Yeah.
just while you were talking having a quick look on X, and there's a graphic I'm looking at which is just showing that they've gone from 0 to 2 billion revenue in 4 years, which is
Yeah.
really incredible, and it just sort of pinpoints some of those key deals that they've done, whether it be commercial or product releases or entries into capital markets. And yeah, they're growing, and it makes me think, and I'm sure you'll agree with this, and I'm sure people listening to this will agree with it, that if we fast forward a few years, there's going to be companies out there, that are in some way related to AI, or companies we already know about that are going to use AI to just change the world. And these companies are going to come out of nowhere, or they've been, in the background, just being a normal company, and suddenly everything's going to change. And in 5, 10 years, we're just going to look back and be like, wow, didn't see that coming. Uh,
Yeah.
but it's a good, I mean, for the consumer, it's great. It's if AI gets better, if it gets cheaper, like the DeepSeek thing. Remember we were talking about? It's
Mhm.
like, okay, for Nvidia, fine on the face of it, maybe not great in the initial reports if it is a lot cheaper and easier to use. But for us, fantastic. Let this happen. Let there be more AI companies. Let it be, the winner can try and take it all. And yeah, I'm all for this. I really am.
I enjoyed that we decided to pick this topic for today because AI has been all about just a few players in this field, but something that I appreciate is getting more competition in this field.
Yeah.
And I think that this will drive further development in the
Yep.
field. And since it is developing that fast, as you said, maybe in a few years' time, we will have companies that we didn't even think about that they will be a major players. And since it is developing so fast, if you are not an expert in this field, maybe you can't even predict what will be needed in the future. And you don't even understand what the companies are doing and if this is something major or not. So it's kind of hard to analyze it. And you really have to dig deep to find all of this information and predict maybe who will be the next big player.
Yeah, I mean it's incredible. I mean I've got quite a few mates not involved in finance. They know about they've heard of ChatGPT.
Yeah.
Okay, they sort of half know what it is, and these friends that I'm thinking of right now have done very well in their fields. They're doing very well, making good money. And whenever I speak to them about their businesses or plans to do like a side hustle, and that I mention, look, just have a chat with, say Grok on my phone or ChatGPT, and let it give you some business ideas because it's incredible what it can do. And they've all come back to me like, wow, it has given me so much gold, and I've had to play around with Grok. And listen, I can't code. I'm not that way inclined. My brain just wouldn't work. But I've had a conversation with Grok and be like, look, I want to get a script that can do this, that's going to give me this at this time of the day, taking information from all these different articles. And it's given me a script. It's told me where to go, how to open it, to copy it into a place where you put this code, and it's worked. And if it doesn't work, I copy like the log to Grok and be like, this is what it says. And then it'll be like, oh, yeah, cool. I need to change this. And it will give me, and it's just like, it blows my mind. But by a few minutes down the line, suddenly I've now coded something to get something, and it's just mind blowing. And that is such a base level, like I'm not gonna change the world with AI, but people are, these language models are, and for even the majority of people out there that still aren't using it, once it becomes way more public, sort of for consumption, you're just gonna see to the moon,
Yeah.
That's the way I feel anyway.
I totally agree with you because I think that now that we are all trying to use it on our daily basis, and some of us are using it all the time for daily tasks, but maybe we haven't even thought of all of the ways we can use it. Mode, I think it's still underused, that we can really have each of us a personal assistant. And for people in specific fields to develop new things, it's very useful. And in a few years' time, we could see a different world. At least I think so.
We will, won't we? And listen, by the way, for some people it'll be scary. You know,
Yeah.
there's headlines running out there that, you know, in 10 years' time, no one will be working. In 10 years' time, everyone's going to have a little robot running around. And, you know, that is quite scary to think of that. I don't necessarily think that's going to be what happens, but
No, me neither.
bring it on, I say. Bring it on. On that note, Neža, let's wrap it up before, you know, the robots listen to this and take over and change what we say and all of that kind of stuff. But we'll be back next week, hopefully with the markets up. But honestly, who knows? Neža,
Who knows?
always, thank you.
Thank you, Sam. See you next week.
See you.